Navigating the responsibilities of being an executor can feel like deciphering a complex puzzle, especially when it comes to financial matters. You might be wondering about all the deadlines and obligations, and a big one on many people's minds is, when exactly are estate taxes due? It is a common question, and getting the timing right is crucial for a smooth estate settlement. An executor should generally file federal estate tax returns, if required, within 9 months of the decedent's date of death. This 9-month period is a key deadline to remember. However, it is important to note that many estates do not actually need to file a federal estate tax return because their total value falls below a certain threshold. The primary reason for this 9-month deadline stems from Internal Revenue Service regulations. This timeframe ensures an orderly process for assessing and collecting taxes on larger estates. The requirement to file is triggered by the gross value of the estate, which includes everything the person owned or had certain interests in at their time of passing, like real estate, bank accounts, investments, and even some life insurance policies. The threshold for federal estate tax is quite high, meaning only a small percentage of estates nationwide will actually owe this tax. To determine if a federal estate tax return, also known as Form 706, is necessary, the executor must first accurately appraise all assets and liabilities to calculate the gross estate value. It is wise to work with an experienced estate attorney or certified public accountant for this step. If the gross estate value exceeds the federal exemption amount for the year of death, then the executor must prepare and file the return by the 9-month deadline. You can also request a 6-month extension if more time is needed, which grants additional time to file the return, but not to pay any taxes owed. A valuable insider tip is to be aware that even if a federal estate tax return is not required, some states have their own, much lower, estate tax thresholds or even separate inheritance taxes. These state-specific rules can vary widely, sometimes requiring a return for estates for smaller than the federal minimum. So, understanding your state's particular laws is just as important as knowing the federal requirements to avoid any unexpected obligations. Understanding these timelines and thresholds ensures you can confidently manage your executor duties, providing peace of mind to both yourself and the beneficiaries. By carefully assessing the estate's value and knowing your federal and state obligations, you will be well equipped to handle the tax filing process efficiently and correctly, keeping everything on track.